We found a force field that's structuring and controlling the prices of all markets. You can find this on our website, tradeforecastmastery.com, and we call it the matrix channels. Here's the matrix channel itself, just a bunch of forces, a bunch of lines, but they're there whether the market is there or not. Here's the example with the S&P already on it. The market eventually will find itself bouncing around and being shaped and structured by these force lines, structuring support and resistance. And here's the gold market. This is the same lines. The prices, of course, vary. There are multiple parallel levels of the same basic matrix. But in the price range of the gold, these are the lines. And you can see, again, they're forming and the markets are bouncing up and down within these lines. A third one, the soybean market, has nothing to do with the other two markets. And yet the same matrix, the same invisible forces are forming and structuring the highs and lows. So how do you use these things? Well, the obvious way is you can use them to generate support and resistance levels as the market moves. And as the market comes up to one of those lines, if it's a normal market, it will generally find resistance there and tend to go down. But what's interesting is if it breaks above those lines, then that means the market could be very strong, and it gives you a warning, gives you a heads up. Another way of using these lines, which is kind of interesting, is aside from them being support and resistance, you can see when they intersect, as in this example with a very simplified version, you can see how the market will come up into these little corners where the two lines, the upper and lower lines, crisscross, and it'll stop there and turn around. Several different places you see that example. So that's another way. A third way, which is even more profound, is when one line crosses another, the time that happens very often represents a low or a high or a transition or a change point in the direction that the market is moving. So there are three different ways you can use these lines. They are also invisible. Nobody knows about them. They're not generated by Gann lines. They're not generated by Fibonacci relationships. They're not generated by any kind of support and resistance calculations that you have seen before. And for that reason, you have an advantage over everyone who doesn't know that they are there. A couple more things you should know. These matrix channels exist on every time frame. They exist on the very large time frames, weekly and monthly level, although that would be more for investing purposes. They also exist on the intraday charts for those who are day traders. And the charts that we're putting up weekly, once a week, they're generally good enough for most purposes. Most people who are shorter term trading, but not looking at 1 minute charts or tick charts. And for the most part, they'll be useful even for people who are doing swing trading, because if they have an entry or an exit, it can help them to refine the precision of those points.